I'm the CEO and co-founder of Sightline Climate. Originally started this actually as a newsletter called Climate Tech VC or CTVC. Can I just get a quick show of hands? Who here has heard of or read CTVC? All right, nice. Okay, so we still have some others, which is great. So CTVC is a newsletter focusing specifically on climate tech. So we write a lot about the climate capital stack, which is really about the different types of funding, the different types of investment to really scale climate tech across lab stage. Oops. Here we go. There we go. From lab stage all the way to scale. So what do we mean when we say climate tech? For those of you who may have been around in the early 2000s, this used to be called clean tech. Energy, transportation, technologies to really scale to get to a net zero world by 2050. Now we've sort of expanded the definition of climate tech from clean tech. So we see climate really as a theme rather than just an industry. The way we think about climate tech spans across 7 broad verticals, from energy to transportation, built environment, carbon, industrial, and climate management, and food and land use. So a lot of the nature, biodiversity that Tree Economy is working on. And when we think about financing climate tech, a lot of it starts at this innovation phase, right? So this is where early stage government grants, venture capital can start to play a role. But in climate tech, a lot of these technologies go from lab stage to pilot stage to demonstration stage, then needing to build physical assets, physical projects, capital intensive facilities, plants to really scale these technologies from lab to beyond. And so when we look at the types of financing available to scale these technologies to what we get to scale, there's a pretty healthy amount of funding at the venture and growth stage. But when we get to this gap, where we're trying to finance first commercial facilities or early stage demonstration projects, such as direct air capture or sustainable aviation fuels, there's a dearth in funding here. On the scale side, that's where banks, commercial banks, and project finance and infrastructure start to play. That's when these technologies get to scale, or what we like to joke, get to boring, where all of these projects are relatively, financed in a pretty commoditized way. There's commercial debt available, there's relatively low risk, but before all these climate technologies can get there, there's this gap in financing. And we can see this in the data as well. So we're tracking a lot of the data on both the venture and growth side. And when a company in climate tech, oftentimes hard tech, goes from seed to Series A, a lot of them are able to kind of get to the next stage. What this graph shows is the graduation rates. So the number of companies each year that are graduating to the next stage, that are going from seed to Series A to Series B to Series C, and so on and so forth. What we've started to see is that companies are struggling to graduate at later stages. So that means once a company gets to their seed or Series A stage, it's a lot harder for them to get to the next stage. And so there's higher drop-off rates. And that's translated as well into the overall investing that we've tracked. So since the very beginning of 2020, when we were tracking the data in this space, there's been $142 billion US dollars that have come into climate tech, which is incredible given there was $25 billion that came into clean tech back in the day. So that's really exciting, but investment has been down, and it's been 30% down in 2023, really driven by this decline in growth funding that's been coming into climate tech. However, it's showing signs of life. So we can see here, Q1 2024, there's an uptick relative to the prior year's quarter. So why is that? Why is there showing signs of life? So despite this drop, climate tech investment, we think, should regain momentum this year. There's 2 big reasons for this. I'll add a third bonus for you all as well. The first is the climate capital stack is growing and maturing, which means that there's more investment, more diversified and mature investment that's coming into the space. And overall, the pie is larger too. There's more capital. There's what we call dry powder ready to deploy. And the third piece I'll add on to this as well is that government and public funding is actually playing a really big role here as well. So it's not just private investors, venture capital, private equity that's coming in to invest in this space. It's big government initiatives like in the US Department of Energy has the Loan Programs Office that's facilitating non-dilutive financing for climate tech. In the EU, there's the European Investment Bank. In the UK, there's Innovate UK. So there's also a lot of public funding coming in here to facilitate companies getting over that gap. And so when we started tracking the space initially in CTVC, the newsletter was initially called Climate Tech VC for a reason, we tried to find all of the active climate tech investors in this space. And what we found were there were less than 90 investors. They were nearly all VCs, and most of them were early stage in focus. Most of them were investing at the seed or Series A stage. Now, last Friday, we actually updated this climate capital stack. We've been updating it every year. Fast forward 4 years later, we started this in 2020. Fast forward to 2024. Now there's 378 investors we've tracked that are actively deploying in climate tech. What that means is they have to have invested in at least 2 deals over the last 12 months. They have to have over $5 million in assets under management, and they have to be an institutional fund. So there's a way larger spectrum of investors that are investing in climate tech. These are just the super active ones that made our list. But that list has quadrupled in the last 4 years. So that's exciting from a total numbers standpoint. But what's even more exciting when you trace back to that first chart showing the different types of capital coming into this space, a lot of the new investors coming in are actually those growth and infrastructure investors, many of those investors that can potentially help to fill that funding gap. And the other important player here are actually corporates. Lots of corporate venture arms or corporate strategy teams that are starting to directly invest in and finance climate tech as well. So now 16% of this stack is actually corporates who can finance, pilot, partner, and even potentially acquire some of these technologies down the road. I didn't have a QR code here, but if you go to ctvc.co, you can actually see this stack. It's interactive. It's a tool, especially for founders, other investors, LPs, to kind of understand who's actively playing in this space. This thing doesn't like me. Come on. There we go. Okay. And to kind of put a finer point on that too, it's not just that the overall list is growing. The overall list is growing because the number of funds is growing. So we can see how over the last 4 years, the number of new climate funds as a whole have grown, but also we're starting to see an increase in the count of corporate VCs, so CVCs, infrastructure funds really looking to finance projects and assets in the climate tech space, and also growth equity. So this is a really important signal that there's more diverse, more mature types of investors coming to finance climate tech as well. And they're bringing a lot of money. AUM stands for assets under management. You can see how in this right-hand side, these are funds with that are over $500 million in size. So starting to see not just more mature types of investors, but also investors with larger and larger funds coming to invest in this space. Last quarter, I think it was, Brookfield announced a $28 billion growth and infrastructure fund to finance the energy transition and climate transition. And this is a bit of a nerdy chart, so I won't go into too much detail here, but we did some back of the envelope math to illustrate how much capital raised from these funds is actually available to companies. And so we ran some quick fund math, which I won't get into, but assuming that these funds are 7 years, we've estimated that there's actually $52 billion of investable dry powder, which is capital that has not been spent yet, that's available in the market to finance climate tech, especially to bring companies across this gap. And so the takeaway I'll leave is here. Right now, what's different from clean tech, 10 years ago, there's a more sophisticated and maturing climate capital stack to really support this gap, to really help companies get over that scale. So that's the good news. However, investor capital, it's not free, right? They have certain milestones, they have certain expected rates of returns. So I'll leave it with all systems go on getting climate across the gap. Now it's really up to the founders, the companies, to hit these milestones and really sort of enable a lot of these key technologies so we can get to net zero, cross over this gap and get to scale where banks and infrastructure investors are there to finance it. Awesome. All right. Thank you so much.